Hello, my favorite traders. Today is Friday, August 19th, and what a wild week it's been on ES. So, we have had some high and lows for our small account challenge. I am trading the ES S&P 500 futures micros for the small account challenge. My normal size is 4 lots. Today, I want to talk to you about the importance of having a trade plan and my results for Friday, August 19th. Sometimes I wonder if I should even trade on Fridays, quite honestly. I feel like Fridays should be called, I heard another trader say it on Twitter, and I thought it was perfect. He called Fridays, not trading on Fridays was Capital Preservation Day. So I think I'm going to change Friday to Capital Preservation Day, which I 100% agree on. Um, Friday is like a box of chocolates. You never know what you're going to get when trading. Could be a banger or it could just be a poop sandwich. So, one of the things I wanted to talk about is we've had a huge, nice run up on ES. We've closed pretty much for the past almost, I think it's 3 weeks. The bulls have closed in control and the bears do not like it. So, what we see here is I have the 4 hour chart pulled up for you, and we can see starting July 26th, we had our nice, beautiful bull run up where we had a little sideways action here. Then we had another leg starting on the 10th for our next run up. And now we see ES is starting to go a little bit sideways and even retrace down. One of the most important levels that I wanted to talk about is this 42.22 level. And let me turn on all my beautiful markings here and go over it with you. The 42.22 level on ES is really important because that is the midpoint of the year's range. That's what that is. So it's the 42.22.75 or just 42.22. That is the midpoint of the year. And today, I was looking at it as really important to see if we were going to retest that. And the reason why was, let me make this a little bit bigger for you so you can see it better. So this is the 1 hour chart. And we can see, like, basically after the market closed on yesterday, we closed around 42. Let's see, where did we close? We closed at 42.90. And then overnight, ES took a massive 35-point dump in the Globex sessions. So we can see here, this is the Globex high, 42.8850, all the way down to 42.41. So I was watching for us to break under the level and then possibly test that midpoint at 42.22. So I want to go over the trades that I took today, and I'm not going to do a live replay of it only because the trades I got stopped out quite a bit. Let me just show you on my trade performance here. So you can see here that I entered the first trade at 9:41. I got stopped out. The next trade was at 9:52. Right here, I got stopped out again. And then I will go over the trade that's really important. The 9:55 trade that actually worked out. Then I took a later trade around 11:12, got stopped out again. I took another trade around 10:48. Was frustrated, got stopped out again. Well, actually, I got stopped out for $1.25 loss, which netted today's performance at $62.50 for the day. So not too hot, but not that great either. So this is why I wanted to talk to you today about the importance of having a trading plan. So when you start going over levels, and if you're just starting trading, I would say don't look at more than one instrument. Like if it's one stock you want to trade, if it's one index, just focus on that, get to know it, because once you get to know that one index or that one instrument that you want to trade really well, if you're trading futures, if you're trading the S&P, if you're trading NASDAQ, if you're trading crude, if you're trading gold, especially the S&P and NASDAQ, there will be a setup almost every day for you to make money. And if there's not, that's fine too. But once you get to really know the instrument that you're trading, then you can have the confidence that you're going to be able to extract profit out of the market when the conditions set up for you. So today I was looking at this dump down that we did. So my thought was that if we break under, so my actual trade plan was if we break under 4240 and we break under this key level that I have mapped out from ages ago, 4236, then I would be looking to target 4222. So that was my trade plan. Once we break under 4236 to target 4222. One thing I want to talk about is when the market is making a move like that, it's not going to happen in a straight line, right? It's going to take a little while for that to happen. And odds are it'll probably happen later in the day when everybody's frustrated, tired, having a martini, or, picking up the kids from school. So that's why you need to save your mental capital for when everything is aligned according to your trade plan. Now, my trade plan was fairly straightforward. I was waiting for a breakdown of this level, 4236. Once I saw we got close or near it, I was then going to target the 4222. All right, so let me tell you how my plan went awry. I like that word, awry. So I was watching the beginning session. Let me flip to a 5-minute chart here to make it a little easier to see. So as we sold off really hard, I mean, if I was more prepared, because I started a little bit after 8 today. I'm on Central Time. I was not really prepared to just jump right in and start trading. I wanted to make my plan, and that's why it took me a little while to come up with my plan. And we were already selling off hard up until 8:50. So had I caught this move, it would have been awesome. I would have been done for the day. But I wanted to see if we were going to break below the Globex low. And when you're making your trade plans, I encourage you to map out the prior day high and lows, map out the high and low for the Globex sessions. And then Globex is Asia and London. So that's basically, I'm on Central Time. So Asia starts at 1900 and London starts at 2 a.m. And goes all the way till 10:30. So those are really important sessions for you to map out. So when you're planning out your levels, do the prior day high and low, the Globex high and low, any major support or resistance key levels that you've noticed for the past week, and then any critical levels like this one that I did some research on, and I realized it was the midpoint for the year. And I'll do another video on how to map out key levels, and how I actually map out all my levels. So I noticed that after we had our crazy sell-off at 8:50, then we entered a period of consolidation. So here I was pretty much sitting and kind of waiting for my trade to set up. And then when it actually did set up after we broke under the key level, because I didn't want to play the consolidation when we were still like 42.35 all the way up to 42.44. But I saw that we were selling off with volume, so I entered at 9:52. Did I enter? No. I'm sorry, 9:55 was when I actually entered at 4:30. Um, la la la. 9:55 at 42.37.25. That was 30. I'm sorry, 42.37.50. That was my actual entry right here. Then we sold off for a nice 10-point move. So we sold off to 42.26.75. At this point, I was only trading with 2 contracts because I didn't want to trade with the full size of the 4 micros because I wasn't that confident in the action that was going on. To me, with all of this consolidation, it just seemed a little sketchy. I wasn't too positive, so I just said, okay, I'm just going to trade with 2 micros instead of the 4 micros. And I will flip to this chart, our trusty little 5-minute black and white chart that allows us to see all the moves clearly without any other drawings or anything on them. So I entered here, right here at the top of this candle as it was selling off. And then I took profit on one of my micros here at 42.27.50. Now, somehow, I don't even want to say somehow, I missed that this was reversing and not a pullback because for some reason I thought, okay, we're going to reverse up, we're going to touch the 10 EMA here, and then we're going to pull back, and then I'll be able to get out. But I honestly can't tell you why I did not get out when we went back pretty close to the 42.27 price at 10:30, and why I waited until 10 minutes later at 42.34 to close out the second contract. So the first contract I closed out, that was a nice 10-point move that I closed it out for $50 profit. And then the second one, it was a 3-point move that I ended up closing it out for since it had reversed all that way, and I closed it out for $15 profit. So I had 2 small losses, $2.50, giving me a profit of, I'll show you right here, giving me a profit of $62.50 for my trades. Here are my trades on Ninjatrader. Here's my entry, 42.39.25, where I got stopped out. And here's my actual entry. No, this is the second time I got stopped out. And then I entered right here at 9:55. So this is my actual entry, 2 contracts at 42.37.50. And then the first one I sold at 10 points. And then I kind of watched this reversal happen without really realizing that this was happening because I was looking at this on the 3000 volume chart and it didn't seem like it was going to be that big of a move. But clearly, I dropped the ball on that. And then I closed out this trade at 42.34.50. And then I tried to get back in to take a long because I thought we were definitely going to start moving up. And I just had my stop pretty much set to break even. Not to break even, like a little bit under. And I got stopped out because we reversed back down short again. So those were my trades for today. And I want to talk about why you need a plan. So the reason why having a plan is so important is I took the trades here in A session. I attempted to take another trade going into B to C session. That didn't work out. And then you saw here that we pretty much traded in a range for most of the day today. We traded in this tight range of 42.45 all the way down to 42.28. So going back to the importance of why you need a plan when you're trading is the market's going to play games. I mean, if you think it's going to move up or down in a straight line, it's just never going to happen. And then we can really see today how it just decided that for most of the day, it was going to trade in this range of 42.28 all the way to 42.45. So trying to catch a move here is just nonsense. So what I should have done was have this move here, which was fine. This short that I took, which was a nice little 5-to-1 short, and closed out. I should have closed out both contracts at the 10 points that they were. So that was a good short. Then I should have just been more patient and waited for the next trade to set up. And the next trade really didn't happen until, well, the way that I was planning the trade was I could have waited until we broke down again under this level here. Or I could have been more patient and waited until we truly broke down underneath this key level right here at 1 o'clock. And this was what I was looking for. I wanted us to break down and go all the way here, which we did. And now we're coming back up. So had I just sat on my hands until about 1 o'clock, I wouldn't have been as frustrated as I was earlier in the session. Not that this wasn't a good trade, but it just was not the ideal trade that I wanted to plan out. So my plan would have been to enter here, set my stop right here, and then ride that down for a nice 13-point move right there. So I really hope that this journey has been helpful, so that you understand that trading is not just about Lambos and stacking cash, although, a lot of gurus make it out to be like that. But it's really about preparation, and it's really about waiting for the right opportunity so you can be an ambush predator instead of just trying to take whatever you see moving because it's moving. So let's do the week in review. So here is the week, and I'm going to do the analysis of it. So this week, obviously less trades are more. You can see here that when I've taken less trades, I've done better. We had a little bit of a snafu on FOMC day on the 17th. That got a little bit nuts, and I created a big loss, which basically it's now taking me 2 days to recover from that loss that I generated. So we ended out the week with a net profit of $48.75. We can see here that, today was it. This would have been a good week had I not done this, right? But I'm learning how to trade. And I think it's important to share like the struggles and the ups and downs. And, you can see that I fall down and I try to get back up again and keep doing it, because I know once I get this, trading's a scalable business. I'm doing this right now with 4 micros. When I do this full size with um, 4 e-minis or 40 e-minis, it's going to be a phenomenal return. So that's why I'm working out the kinks on the smaller version, playing in the kiddie pool right now until I can get into the big leagues. So I hope this was helpful, and I hope you have a wonderful, wonderful trading journey. And if you like this, please subscribe and like my channel. And if you have any questions or any comments, please leave me a comment and I'll be happy to respond. Thank you.